Hello, hello. Welcome to Money Talks with Ayanna Smith, and I am your host, Ayanna Smith, and I am a licensed professional, and I help people, of course, make and save money in a tax-free manner. But some of the other things that I do to help people is to first of all, I help people with final expense insurance. I'm an insurance broker, so I help people with final expense insurance. And then I also help people not only with the final expense insurance, but I help people with the term insurance. I help people with also not only the term, but I help people with the long term, so the whole life and the index universal life and all of those things that will help you to build your wealth. And so our show is going to function with talking about the IUL. And some people say, what in the world is an IUL? And some people say they think it's URL. No, not URL. We're not on the internet like that. Not URL, but IUL. And that it stands for Index Universal Life. But I want to really say that it is something that is allowing us to become our own bank. That's why we say in the title BYOB. Now, some people may know that BYOB is something else, but you know what? We're going to get it all moving and all shaking and growing and knowing that we are going to learn how we can become our own bank, because it is very pertinent and very serious that we learn how to do that. So as I said, my name is Ayanna Smith, and I am a financial professional, and I help people make and save money in a tax-free manner. And I do that, in several ways. And of course, we need to sit down and talk, because it's all about having a conversation and connecting and talking, because we cannot do it without each other. We have to have that one-on-one to sit down and get things moving and growing and going. Okay, so we can elevate. All right, so as I said, I want to jump right in and talk about the IUL and give you all some tidbits. And if you have some questions, just inbox me or put some of them in the comments and all that good stuff. And then I'll get back to you, and we'll set a complimentary consultation up so that we can have a further chat about it. And I tell you, this evening, it's all about trying to get stuff together, because as you know, we have technological difficulties at times, but hey, we don't let that stop us, do we? Not at all. We just keep right on going and smiling. So if you hang with me for just a second, we're going to get this all straight and moving. Okay, maneuvering. So if you see me kind of touching stuff, I'm touching stuff for a reason, because we have to get it all going. All right. So now let's go with our IUL. Now, first of all, I want to say, let's reach out and connect, because of course I always say it's financial awareness month, year, century, because we can't know too much about different things that we have to function and grow and learn. Wouldn't you agree? And if you have questions, please let me know, because I'm here to help you answer them, and here to get your family in order. And you can connect with me at www.askayanna.com, and that's ASKAYANNA. So you can connect with me there and set a complimentary appointment. And also, please make sure that you subscribe, like, and share on my YouTube channel. If you're streaming and watching from YouTube, make sure that we get that followership up, and subscribe to my YouTube channel, which is www.youtube in the / the Ayanna Smith. That's TheAyanna So go there, and of course, you can follow me on all social media outlets by going to my website, because that will connect you directly there. So let's talk about BYOB. Become your own what? Bank. Becoming your own bank. And that's a very serious and absolutely exciting thing, becoming your own bank, because we all need to do that. Okay, and so give me some likes, some hearts, and all that good stuff if you are hearing what I'm saying and everything is sounding fine to you. Okay, so now a lot of times people say it's too good to be true. I talk to people about an IUL, and they say, "Well, what is that URL? That UIL?" I said, "Okay, let's go with IUL, and let's go with it's called indexed universal life. And that is a type of strategy that it falls in that permanent, which we know most of the time as whole life strategies. We know that a whole life will last us from the time we get it until the time we pass away. And so the index universal life falls in that category, along with the ULs, which are universal lives, and they function a little bit differently, but we're going to talk about the index universal life. And of course, as I said, let's set an appointment so we can discuss a little more, so we can get these things and these strategies in place for you if they are a fit. I don't ever want to place anyone in anything that is not a fit, because here I am. I do unto others as I would have them to do unto me. And so I want you to be most successful in the elevation of you and your family. But I will say this: we are in a pandemic. We've been in one for quite some time. And here are the strategies and the things that sometimes we don't know about. So, one thing I would say, we always look at, a lot of us have W 2 jobs. We have jobs that give us a W 2, they provide benefits and all of that, right? And with that, we will get stuck and we'll say, oh, I have benefits on my job, I have insurance on my job. That is wonderful, that is fine. Take what they give you. But I will implore you, I will encourage you highly, providing guidance on looking into what you can get that you own for yourself. Here's the thing with that. Some people don't believe about the IUL. They say, what is that? I don't believe about it. Okay, here's a common reaction. I don't know, it's not legitimate. People say don't put your money there and this and that. But this is one thing I know. With life insurance, and one thing we may not be told about, with life insurance, whether it is just a regular, whole life policy, final expense, because like I said, I share and support people in final expense, to make sure that when you pass away, your family is able to get their money readily on some dollars to put you away. So that is a strategy to have in your portfolio. But this IUL is a savings component. It has a savings component in it, along with the death benefit, of course, when we pass away. But then it has a savings component, which we're going to look at very closely. And then it also has one or two or both of these other components, which are living benefits, which I am a cheerleader for living benefits, because if you get heart attack, cancer, stroke, how many of us know people who've had heart attack, cancer, or stroke? Yeah, how many people? So with that, this type of strategy, the living benefits, provides a safety net if you get sick and have to go into the hospital or have some type of long-term care that needs to happen or what have you. You have living benefits and then the option sometimes for long-term care. So those are just, it's just an all around wrapped up, you're wrapped up in this savings and protection cocoon, I like to call it. Okay, and so looking at this, some people say it's too good to be true. So let's jump in to dispel some of the myths on why people say it's too good to be true, and then I want to then say it's too good not to be true. It's good and it's true. Okay, these things that we're going to talk about. So first of all, I always do my research, look at books, read books, and all that, and people that are proponents and pushing for these types of strategies. So here we go. All right. Of course, we can be skeptical. Who isn't skeptical about some things we don't know about? That's usually until we learn. I don't know if that's going to work. But if we don't ever jump and don't ever try, let me tell you, it's a 100% chance that it won't work if we don't ever try. Okay, wouldn't you agree? Absolutely. So here we are. What's the catch? Sometimes people think, what's the catch with this? Well, it's not a catch. It's basically, it is life insurance, bottom line, with mutual funds inside of it. So that gives your money a chance to grow. You take care of the cost of insurance, because we know that insurance does cost something. Yes. Of course, the earlier we get life insurance, the lower the cost of insurance. The longer we wait, the higher it costs, and then we have to play catch up. So that's the thing. Oh, I don't want that high premium. Well, maybe we shouldn't have waited as long as we did. Sometimes that's what happens. So we just have to play the catch up, okay? There is still hope. there is still something. Hopefully, I try my best. There is still something for us to get so we can be covered. And if you don't qualify for an IUL, maybe you know someone who does, like a grandchild or a child, because it absolutely helps them out, because we can figure out ways to build that money so that they can go to college, they can have money for real estate and just different things. But here's where it works today for us. If we have saved up enough, this is how an IUL will work. An IUL will work it will work because in this pandemic, as I said first, there have been people. This is how it became your own bank. They put their money away. They paid their premiums, and then they put in extra money in a different, and it went to a different pot, went to that savings pot. So lock that. You have your death benefit and you have your savings pot. You have those two buckets, okay? Then of course you have your third bucket, which will either provide you with the living benefits and or the long-term care, depending on how your product is structured and what is offered and what you can qualify for. Okay, does not have to have that component, but you do with an IUL have that savings component without a doubt, because that is the way it is structured and set up. Okay. Indexing, let's go back with the indexing. You may have heard of the S&P, the Hang Seng, and the Euro. Of course, those are three index types of strategies that function, and you will hear about them in the stock market. Well, when something is indexed, it means there is some safety provided, meaning that as things are invested in the stock market, you're at the whim of the stock market. If it goes up, your money goes up. Yes. If it goes down, yes, you're at the whim of that. But if the money bottoms out, the stock is gone, then your money is totally gone. Well, here is the great thing about the IUL. The IUL provides you with the opportunity to have, you may have a floor of what they call zero, so meaning your money won't go any lower than zero, and then it may have a cap of some sort, meaning a cap, meaning the top, the highest the money will grow within that particular product. For some companies it may be 10%, some companies it may be 15, some other companies may not have a cap, but then that deals with also how it will look on what you need to put away and how much just that base cost of insurance really functions and would really be. So you have to look at those things, because we know we have the cost of insurance, and then any money you put on top of that becomes that second part of it, your pocket of money, for your bank. So that's how you build your own bank. And then you look at what you can put away, what you can qualify for, and what's going to fit your bottom line out of your disposable income, or what you can reallocate and move around depending on how aggressively you want to fund this. It's all up to, we have a set amount that you have to get into, meaning that matching your age, matching your health, and all that stuff like that. That's what I mean by that. And then you go from there on what you want to dump in and put in and make deposits into your bank. Doesn't that sound good? Making deposits into your own bank, becoming your own bank, BYOB. You never look at that the same way again, will you? Absolutely not. So here we go. We want to dispel that myth. So here is how you're able to now talk about it with pandemic hitting. When the pandemic hit, people who had this type of strategy in place and had been contributing, meaning contributing to their savings plan inside of that life insurance policy, paying their premiums on time, not letting anything lapse or anything like that, growing and building. When the pandemic hit, and just say they were an entrepreneur whose job shut down on them, the job didn't continue, they had loss of income. If they had enough money saved away, and this is where I really want you to think about it, because this is how we have to get in front of things before they happen. We are coming upon another downturn. It is coming like an avalanche. So these are the types of strategies that we then have to shift our mind and think about putting our monies into. Yes, real estate is wonderful. It's great. Stock market is wonderful. It is great. But this is a strategy, the IUL, which is something permanent, which will give you some guarantees, okay, some to allow you to build. And so the people who had enough money put away and had been growing in this type of policy, was able to then call their broker, their insurance broker, and say, hey, I need to take money out because we don't have income right now. And this allowed, because they've put money in, it's a long-term strategy. You don't just put money in and take it out the next day. It's not going to grow like that. So I don't want you to think that, oh, this is a cash cow. It is once you let it stay in long term. And of course, we're not talking about those get rich quick or those quick in and outs right now. We're not talking about a scratch off ticket. We're talking about a strategy that, first of all, is long term. So I want you to get that. This is a long term strategy. Just like when people work and work and work 30, 40, 50 years and they have put away their money, that was a long term strategy before they could access it. Here we are with this IUL. The people were able to access their money because they had built it inside of their insurance policy. So here's the thing. We know that we're pandemic, COVID-19. Just say, for example, someone had the policy in place, money growing, enough to pull out from. Well, what if they didn't live and have money to pull out? Then that money, there was a great nest egg inside of that policy on top of, you can set it up sometimes on top of that, the family is able to get the death benefit and the money that was growing inside. That's such a win-win. But either way, even if they're not able to get the money that was growing, they still have that death benefit, which leaves the family supported and not in disarray and sliding all over the place in their emotions and in their bank accounts. So that's a win-win. Then the people who say if they got sick and they did not pass away from the disease or what have you, the virus and all that, they were able to then tap into the living benefit side and the long-term care side if they had qualified and the time frames had set them up for that. So it's such a win-win. And that's why I said, I really want to get into this and really talk about it and explain it, because oftentimes we're a little shell-shocked or gun-shy and pull back from it, but it is not something to pull back from if you qualify. And it is such a way to build funds. It's just ridiculous. It's like I can't stop talking about it, because if you know how money works, the compound interest will take care of itself and just compound and build on top of. Same thing with the compound interest. That's a whole different talk within itself, because sometimes we don't understand how the compound interest works. But here it is. Here's a key instance on how compound interest works. In short, if you have a credit card, I'm diverting just a little bit so I can get back to show you how this interest will work with your IUL. If you have a credit card and you say, my credit card was a $500 limit, let's go with something kind of low, but my interest rate was 29.99%, that means that there's 30 cents on every dollar that I borrowed or that I have on that credit card that I use on that credit card. And so just multiply that, and then you have a revolving balance. And each time you keep that money not paid, it's still 30 cents added to that money. And each time that bill is not paid off in full, there's still 30 cents added to each dollar. So think about if that was in reverse working for us. And that's what the IUL and other strategies can provide for us if we know how that compound interest works for us and not against us. So it's all to the good when it works for us and it's coming into our homes and our family and our buckets of money. But it doesn't look so good when we're steadily trying to pay out, pay down, and can't pay off because the interest is outpacing what we can pay. Which leads me to this. Here's how this strategy can work. It can outpace inflation if we put enough away. Now, the inflation rate right now is running somewhere around 8-9% almost, and that's right now. I know that that we're always looking for raises on our jobs and things of that nature if we still have a job, a 9 to 5, and they'll say, hey, we're going to give you 5% raise. Oh, yes, that is great. That is wonderful. That is lovely. Good. All right. But then it's like, you get 5% and then get 10% taken away. Because here's the thing, if you get a 5% raise, let's go here, and you get the inflation that's coming, which is almost 9%. Well, let's do some simple math. 9 minus 5 is 4%. So where is the 4% being made up? Okay, it's not. Not unless we do something like we're saving in ways that secure and somewhat aggressive or really aggressive. And then we can take those gains that we make in some of those more aggressive things and place them over in our IULs, and also look at IUL, look at index strategies, even on the annuity side. But that's a different talk. But this IUL, you will have your death benefit, you will have your money being saved, which could help you bridge that 4% gap, or however much gap it will be if you cannot outpace inflation. Can we ever outpace inflation? Absolutely not. Unless we do some things that we supercharge and push the gas to outpace it. And that means we have to know where to put our money, how to get into arenas that will help us to make money legitimately, and also look at industries that will outpace inflation and that are recession proof. I said that there's the pandemic. I said that in 2008, those of us who were here, 2008 working, there was a downturn, a serious one. 2020 downturn, got rocky and shaky. But if you think about it, it's been about 14 years, every 7 years, up and down, up and down. Here we are, we're getting ready to hit the down again. And those who have been preparing, basically like the everybody ever heard the story of like that with the ant and the grasshopper. One played, one stored and worked. The ant worked, slow as he was, moving and shaking, slow as he was, still moved and shook, right? The grasshopper played. And then when it was time, the grasshopper couldn't play anymore. It was too cold. He hadn't stayed up anything. And then he was frozen and couldn't eat anything. And well, we know the rest, right? But the ant steady. So that's how we have to be. This IUL strategy is like the ant strategy. I would say that you can put that to it. And as long as you are putting money away, pacing along with it, doing what you need to do, understanding how it works, it can be an awesome strategy for you and your family. So I want to, of course, I can talk a little bit more, say one more key piece about the IUL. I said it has a floor, meaning there's money growing on the inside of it, and we got off on the compound interest. But there's a floor of usually zero, meaning whatever money you put in above your premiums, if the stock market were to crash, because it's an index strategy, that money will be safe at zero. It won't make any money, but you won't lose any money. Does that sound good or what? No loss there. And then it has a cap, like I said, a ceiling. It may be 10%, 15%, whatever that particular company that you're working with deems their cap is, then that's how much money you could possibly make up to that percentage. So you could possibly make 10%, you could possibly make 15%. Whatever that company says is how that works. So you can make somewhere in between the latitude of the floor and the ceiling. Some companies even offer a little bit more, meaning that you can make a little bit more at the bottom, still make some money, even if it's the lowest. It may be 1%, 2%, but either way, there's no loss and it's a win-win for you. So you know that when it's time for your money to come back around, that compound interest can still hit it because it's still something there and you're not starting from negative 1,000. So that's the thing. You always still at least have what you know you put in and what has been built while the market is still going. And if the market gets to a halt, a stalemate, or it crashes, your money, because it's in an index strategy, will hold still for you. It won't lose out. And then it can start picking back up and building again once those indices kind of balance themselves out. Does that sound good? I tried to give you a little bit. Don't want to talk you all over the place, but just want to give you enough to wet your whistle. So we have to come back again and talk about this a little more. If you have questions, please make sure that you inbox me or send me an email or send me a message on social media to talk more about it. And let's sit down and make a complimentary consultation. And please book me at www ASKAYANNA, and we can talk so that we can get things together. I know that there are people out there, or you may know some people who have been on different jobs and have left a 401k or a 403b or a 457 or a TSP, left it there because they have separated from that job, and their money, they could not access their money without penalties. And so they said, I'll just leave it there. And the money is sitting there not doing anything for those people. Please contact me because we have strategies that can help you to pull all those monies together. And if it is a nice sum, a sum that is workable, roll that money together and let it start working for you and building for you and your family. So let's not hesitate. Let's connect. Let's talk. I love to sit down and speak with each of you. Please like, share, comment, and make sure that we connect. Subscribe to my YouTube channel. And I look forward to seeing you on all social media. This is Ayanna Smith, and we've talked a bit about this IUL, but we are not through. Thank you so much for your listening. Let's say listening ears. And if you have questions, please contact me. This is Ayanna Smith at Money Talks. Money Talks with Ayanna Smith. I am a financial professional, and it has been a pleasure sharing just a tidbit of the knowledge that I know, because the more I learn, the more I want everybody else to learn, and I want to break it down in a succinct manner to help you out so we can all grow up and go up together. Have a wonderful evening.